Hi, I'm Rob Van Rapports. Welcome to MBANow. I'm here today with Brian Martin, who is Head of Business Development at Blende. Brian, thanks so much for being here.
Thanks for having me. Happy to be here.
Let's start off by you telling us a little bit about who you are and what you do.
Sure. I'm Head of Business Development and Partnership at Blende, and I think that Blende approaches business development from an engagement and partnership perspective, whether that be working with Fannie Mae and Freddie Mac on data validation programs, or engaging with other tech vendors around how we can enhance or change the mortgage process, all the way through to dealing with global consulting firms like McKinsey and BCG on digital transformation of major financial institutions.
Sort of leads me into my next question. How does Blende sort of simplify lending?
I think there's two ways to think about it. You can think about it from the consumer point of view. From the consumer's perspective, we are the digital way that they can engage with a lender if they choose to. So that means their loan officer or their loan team, they can get their application complete and really accelerate the process to get to the home they want to get into as fast as possible. And from the lender's perspective, we are a platform or a tool to be the digital engagement with the borrower so that they can collect the necessary information, the data, the documents, to get that really robust, complete application. You know, we're not trying to replace loan officers. We're really just a tool for them to provide digital engagement.
Looking at the markets a little bit, do you think we're in for another refinance boom?
I do. I don't know when it's going to occur, but I think it certainly is going to occur. And that's a combination of a number of factors. I think given how interest rates have changed and could potentially decline in the future is really a major factor. But if you combine that with debt levels, particularly of middle-aged people, 35 to 50, they're near a peak. And refinancing is a great way for them to lower their monthly payments, to really manage and save for the future. So we think that a refinance boom is potentially right around the corner.
So who's a good fit for a refi?
I think somebody who's got some reasonable amount of home equity built up, but anybody really within the last 2 or 3 years that has taken out a mortgage should see rates either near or below the levels that they took those mortgages out. So potentially there's a whole universe of people that are candidates for refi.
Everybody else seems to be talking about margin compression though, so why is Blende talking about the refinance?
Absolutely, and we're very aware of the margin compression and the challenges going on in the industry right now. We want to be sensitive to our customers' needs and the lenders' needs in the community, but I think that refi and margin compression actually go kind of hand in hand. And if you think about it, historically one of the challenges for refis is that you need to staff up, you need to hire people, you need to put people in place, particularly if you don't have a modular process. If your process is really end-to-end linear, you've got to simply add people to the process to scale up, right? So what you can do today, utilizing a company or software like Blende, is we enable you with an end-to-end process that's modularized so that you can scale up, that you have volume elasticity when that refi boom hits. And there's an interesting study that was just published by McKinsey last month that looks at what companies do during downturns and the result or the performance of those companies thereafter. And they came up with this cohort of companies they call resilience. And these resilient companies, they looked at the behaviors they do during the downturn, and they found that this cohort had really strong performance post-downturn. And there was a number of characteristics they identified associated with these cohorts. The one that really struck me was that these companies often engaged in digital acceleration, meaning they were making technology investments, they were creating a gap between them and their competition during the downturn. They were serving their customers well, they were providing a frictionless experience, and doing so at a lower cost. And this gap actually expands because the laggards often feel like they need to retrench during a downturn and don't engage in acceleration, and this gap only increases as economic conditions improve. And so I think that what lenders do today, while margin compression is occurring, is really going to determine their success and hopefully their outperformance in the future.
So why is money going to digital solutions?
I think if you zoom out a little bit and think more broadly, digital banking is here, right? It's just not well adopted. But if you look at statistics and studies, age group 35 to 50 are actually, they want digital solutions, they want digital banking, yet only 5% of that age group is banking online entirely. So I think that we're going to continue to see investment in fintech, investment in digital banking, and this trend will continue in the future.
Do you think a digital mortgage is something that millennials would only be interested in?
That's a question we get often is, what do you see in the data? We see hundreds of thousands of borrowers come through our platform, and we analyze the data. And the one thing we found, which was really surprising, is the answer to that question is no. We don't see there to be any statistical significance amongst age groups of adoption for digital mortgage, which is pretty surprising. People generally think that millennials will gravitate towards a digital mortgage and will be shunned by other generations, and that's not what we see. One interesting study that Fannie Mae just published around the digital experience or the digital mortgage is they found 75%, so 3/4 of the survey population that they looked at, want a digital solution. They want to be able to provide an application, data, documentation online for their mortgage. That same group, when they asked a different question, they asked the question about, do you want to, 65% of them responded that they want the ability to interact with a person during the mortgage process, which makes sense. If you think about a person's mortgage, largest financial transaction of your lifetime, is complicated. You're going to want somebody that you trust to educate you and help you through the process and guide you. But what that tells us is that we can provide a great borrower experience, a great consumer experience, but we, Blend, need to be omni-channel. And we provide that solution to our customers where you can engage when you want, how you want, and where you want. And always be in touch with your loan team and get a hold of a person when you need that trusted advice.
Yeah, that's really interesting. Listen, thanks so much for stopping by and telling us a little bit about Blend and really your perspective and Blend's perspective on the industry.
Thanks for having me.